as well. So a lot of stocks out there doing a thing of their own. But let's get in Jitendra, Sriram, Senior Fund Manager, who's joining in on the show at Baroda BNP Paribas Mutual Fund. Hi, Jitendra. Good afternoon. Good to see you win. Which camp are you in? Constructive or cautious?
So I would say that from a market perspective, we are quite constructive. Although I feel that in the very near term, you might actually see the market consolidate a little till the earnings momentum picks up. I think if there is one parameter which still is a little disappointing, I would say that has been that earnings is still to lift up. All the other parameters like monetary policy, fiscal growth, all those I think are flashing the green signal right now.
All right, but we'll require an additional trigger, Jitendra, to move up from here on, because the markets have moved from around the 21,700 odd mark. We're back towards closer to 25,000 odd. What could be that additional trigger? Earnings would be great to come by, but anything else, according to you? Maybe some part of the China plus one has already been baked in. India is a structural story. What else?
So I think one other parameter which could have a lot of sentiment booster for India could be the finalization of tariffs and all that, which with the Trump administration, as and when that comes by. See, it started off at a very high point, and obviously it's over the period of time things appear to be toning down a little bit. And once we have actually said that this is it and nothing else over and above this, I think that should be one kind of a major relief part of it. The second, I think, is that we're just, the history right from the Russia-Ukraine conflict. We have had a tighter monetary policy all up till about October, November of last year when we started the easing process. My suspicion is that even the easing process and the transmission lags that take place, it will take us at least another 12, 18 months that we should be probably in an easing phase. So that should be the other positive which is there for markets as such.
Jitendra, so just getting your sectoral view, from the start of the year to now, which theme has positively surprised you and which has worked contrary to your expectations? It didn't do so well, so there was a bit of a negative surprise. Go ahead.
Yeah, sure. So one thing I would say has been that in the case of something like quick commerce and the consumer discretionary space, I would say that some of obviously the break-even points or so on and so forth have got a little deferred from what we originally began the year with. So to an extent, that has been a space that has come off a little bit. I would say where I have been actually positively surprised has been on power and power equipment. We have continued to see a lot of strength in that space. So it's not only the new areas of renewable and all, but even in the space of thermal, traditional power equipment, transmission, etc., has continued to do exceedingly well. So that's been a space that we have actually been positively surprised by.
Jitendra, great to have you on. Rounding up to the policy on Friday, and the broad expectation is that we should get 25 basis points this time around, and maybe more over the rest of the year. In the financials universe, what are you playing? Banks, non-banks? Where should one be in this downward rate cycle?
So if I were to look at the subsegments of financials, when you look at private banks, state-owned banks and all that, we are generally as a theme far more positive on that. So it's a smaller list for me to talk about what we are probably not so excited about. So one is obviously the MFI space, which continues to see these stresses after the changing regulations in places like Karnataka or Tamil Nadu and all that. So that's a space we have generally stayed away from. The second has been a little bit of a valuation challenge in some of the areas exposed to capital markets, because the valuations have become quite stratospheric in certain cases. So that is an area that we have tended to be a little softer on, or we have taken some money off the table there. But by and large, I would say banks, private banks, state-owned banks, also NBFCs selectively, plus even insurance, etc., we've been quite positive about.
How worried are you, Jitendra? Last few days, I'll tell you what, 15 days ago, we had put out this piece on CNBC-TV18 about the kind of liquidity that mutual funds are sitting on. And that gives you comfort, right? When you know there's liquidity out there, 2 lakh crores of cash from pure equity mutual funds, 7% of the equity AUM, we feel good. Suddenly, this paper supply is just non-stop. Nimesh joins us. He tells us today there are 2 deals. Next day, there are 3. Some days, there are 4. How worried are you about this fresh supply? Because you want some cushion, right? You want the mutual fund industry to have a good amount of cash. One would say our markets are maturing, good way, as much as liquidity, is being thrown at them, they'll be able to consume it. The other point is saying, hey, this is getting worrying. We saw what happened in the last year. At some point of time, it gets excessive. Your take?
Yeah, so I do I agree with you in a sense that, too much of supply will obviously have its own challenges to contend with. But having said that, I would not compare it with last year, because last year, the primary supply of paper was way too high. So to an extent, what impacted valuations also was that we had too much of paper supply from the IPO and the QIPs, etc., etc. This year, it's been largely more profound on the secondary market sales, a PE fund unwinding or a promoter unwinding like you had in the case of ITC or something like that. So you had more selective sell downs, which is there. And I don't think the magnitude is very similar to what you saw last year. Last year, the paper supply was quite incredible. So I would say it is definitely something we have to watch out for. But as of now, I won't ring the alarm bells at this point. It's not so excessive that it is actually proving to be a dampener for markets.
You spoke about, quick commerce and how it's negatively surprised. The competitive intensity has been pushed forward versus your own expectations. So when it comes to stocks, with this background in mind, what would you do? Is it time to, not buy them at this juncture, or this is the time to accumulate because things will turn around eventually?
So if I look at the space from a longer term construct, I'm extremely positive about it. You also mentioned a little while back about how the way we consume things and way it's all dynamically changing. So it's something that's quite exciting. But I think obviously there's not a linear story in a sense. You are going to see a secular run go through it. You will have these phases when, competitive intensity accelerates in between, deteriorates in between. There'll also be phases when, because of this instant, the quick commerce kind of thing, you suddenly see that the intensity worsen, and as a result, your break-evens are pushed back, etc., etc. So I would, at this point, we have actually, in our portfolio, we have trimmed a little bit of our weightages to quick commerce. So you could say that we are not actually biting right now. We like the space. We will wait for better entry points to get back or build back weights on this.
And in power, where you liked the narrative that's playing out, the numbers that have come through, have you increased your exposure? And in which part of the power theme, the value chain?
Sure. So I think let me take it one step up from a much more top-down view. I would say you have recently seen these instances when, trading prices on the IEX and various other energy traded markets hit a realization next to nothing as such. There were periods when prices really collapsed. At a conceptual level, we are preferring base load plays over merchant plays. So let me put that as the first thesis that we are going with. We like people who have long-term contracts, who have much more safety in their, cash flow generation and all that. So some of these PSU generators, etc., which typically have extremely long-term agreements for purchase of power, that's where the space we are much more focused on. Alternatively, I would say the other area that excites us is also the downstream of that, the power equipment space. So whether it is thermal power or also it is transmission equipment, those are areas that seem fairly interesting to us. I think for the next 2 year, 3 year, you will see a fairly decent buildup of revenue growth there.
Okay. All right. Jitendra, we'll leave it there. Thank you so much for joining us. Good conversation this afternoon, as always. We look forward to the next one. Well, with that,